So take a look at the euro versus US dollar on a 5-minute chart here. The market had a nice trend type move from the highs down to the lows. Stayed in a nice little channel. Also had nice little resistance here against the ceiling around the 86 level. When the market broke through that 86 level on the trend line at this point right here, we saw the market continue its move to the upside. The upside has stalled currently or the last 5 or 10 minutes against the 100 bar moving average on this 5-minute chart. It comes in around the 45, 46 level. You can see we moved just above that level and then started to come back to the downside. Now we do have this support that we're heading toward rather quickly against the 05 level, that level and these lows here that push the market down, and that's somewhere around the 142 level. Let's call it 142 to 142.05 is going to be our support level on the downside here in this up and down action in the euro versus US dollar. Nice correction, a little over 38.2, found resistance against 100 bar moving average. That's decision time here for the euro versus US dollar. Find support against 05 level or move up back above the 38.2, back above the 100 bar moving average. We'll see how that all pans out in this afternoon's trade. Let's take a look at the sterling versus US dollar next. And from a hourly perspective here, what we saw here was the pound sterling move below the 100 and 200 bar moving average in the New York morning session here. Since that time, we've seen further selling pressure. It took the price below 61.8%, but once the market was able to rebound above that level, we started to move toward the 50% retracement. That's where we currently sit, right around the 100 and 200 bar moving average, right around the 50% retracement. It's probably happy level for the sterling versus U.S. dollar. We do have the inflation report coming out in a couple of days in that currency pair, and it's kind of been the currency pair that's been left on the sidelines here, hasn't it? With most of the focus being on the U.S. and the eurozone. That doesn't mean that we haven't had our share of volatility apart from this little non-trending period right here. Most of the activity has been rather volatile for this currency pair, with moves to the upside, to the downside, to the upside, to the downside. That was a little, like that. So non-trending here most of the time, trending up and down here for the sterling versus U.S. dollar. So what does that mean for you as a trader? That means that you have to you have to like your position, not necessarily marry it. You also have to look for certain key technical levels here. One, two, three different times the market fell. It was not able to extend above that level. That helped start to move to the downside here in the sterling versus U.S. dollar. Also, this 38.2% retracement, what would do? Market came down to that 38.2% retracement, moved back up to the high. When it fell through the level here, we started to move to the downside here. So all these are little technical tools that you kind of hope that you get a little trader's luck, have a little point where you're able to lean against one of these key technical levels, 38.2, the highs here, right here, maybe the 100 and 200 bar moving average here, and catch a few pips here and there. Get out when you feel comfortable. Don't let your fear take over. This isn't the type of market that you want to press too hard. Let's take a look at the dollar versus yen, and we saw the intervention last week to the upside today. Even though that we had all that issues with the S&P, with the eurozone, we have a weaker dollar yen. That's typically been the case, but it hasn't been the sharp move that you'd expect with the flight to quality into a currency like the yen, with gold prices up, $50 or whatever they are here today. That it's kind of run out of steam with the intervention here, and as a result, what we're seeing here is some support against these old lows in this area right here. I've marked it between the 45 and 55 level, and that's where the market currently is trading. If we're able, right now, we've been able to hold that level, move above the 55 level, and we need to get back above the 61.8 and the 200-hour moving average to keep to have any chance for this market to do something like that. Until then, look for support here at the 45 level. If we break below it, look for a sell-off down toward this 77 level. If we break through the 77 level, then we should see lower levels in the dollar versus yen. Let's take a look at the dollar versus Swiss as our next currency pair. And it was looking like the dollar versus Swiss was kind of ignoring all the problems in that around the globe. yes, the dollar Swiss was lower, but in the New York session, what did we see? We saw the market move back up toward the unchanged level. Not the quite move that you'd expect with the flight to quality in the Swiss franc that we've seen take this currency pair in a trending move to the downside. Nevertheless, the move to the upside was able to hold resistance against the 50% retracement against the 200-hour moving average. Didn't quite get close to it. So where do we stand now in the pair? Well off this resistance level on the top, and in fact looking toward our record lows here. These lows come in around the 75.25 level. Break through that level and could see further selling pressure. We are staying above those levels. Find some buyers on dips against those levels. So those buyers, always seem to find themselves in the market, but a break through that level is going to likely lead to further selling pressure in the dollar versus Swiss. So look for support down here against the low, but I wouldn't necessarily buy it because we're near low unless you have a nice real quick stop on the level on the break below it, because the trend is fast, trends are directional, and that's dollar Swiss seems to be more in a trend than anything else. Let's take a look at the dollar versus Canada. Dollar versus Canada has been moving sharply to the upside. Why? Oil prices are down quite sharply. The idea that the global recession is going to lead to lower oil prices down the road has the dollar Canada moving to the upside, Canadian dollar weaker. Also lower prices or slower growth in the U.S. Would also lead to a lower growth out of Canada. Canada is a main exporter to the United States. Lower growth in the United States leads to slower Canadian economy. May lead to the central bank not raising rates as they were expected not too long ago. So with that said, we have moved above the 100-day move or 200-day moving average here in the dollar versus Canada, and I'm scrolling back to the last time the market was above that 200-day moving average. That's a green line in the chart, and you have to go all the way back to September of 2010 to see that. So that's positive here for the dollar versus Canada. What we're finding a little bit negative is this inability to move above the June high. That June high came in at 99.11. The market moved above that level and quickly came off. If we take a look at the 5-minute chart, you can see here, put a horizontal line around the 11 level, and the market was above that low for about 10 minutes, and then it moved back below. Came back 38.2% of the move up from today's low to the high, and found some support against that level around the 71 level. So it looks like the market is setting itself up for support against these two levels, resistance against this level, and we'll decide what the market wants to do in between. Does it want to move? Which way is it going to move? Are we going to move above that level or move below that level? That's the question. Right now, the bias seems a little bit more to the upside here, keeping the trend intact, staying above the 38.2 or moving, failing on a move below the 38.2. Got to get through this 11 level on the top side, however. So that takes a look at some of the major